So good day traders, welcome to my YouTube channel and welcome from the trading week. Let me hope it was a profitable one. Today in this today's video, we are marking the start of my masterclass series. I will be producing several videos to teach you what I always base on during my trading sessions. I know in the beginning you have a lot of questions, but these questions will be answered as time goes by. In the consequent coming videos, your questions will be answered. So I promise you this. What I request you is to like the channel, to subscribe to the channel, and you give comments. There are those future comments, the comments that I base on to make future videos. In today's video, we shall look at order blocks, the order block theory. What are order blocks? Order blocks are specific areas where large market participants previously placed buy and sell orders. Who are those large market participants? Definitely the institutions, the big banks, and the big boys. So we as retail traders, we follow the trend that the big boys, the institutions have put for us until that trend ends. Why? If there is a buyer, there has to be a willing seller. And if there is a seller, there has to be a willing buyer. And that leads into creation of order blocks. So, well, we have got to understand what order blocks are, and we really now can define what an order block is. So there are two types of order blocks. There is the bullish order block and the bearish order block. The bullish order block leads to creation of more buys, and the bearish order block leads to creation of more sells. So let us begin with the bullish order block. What is the criteria of trading the bullish order block? What do you base on when you are trading a bullish order block? Or what will you look at in order to trade the bullish order block? Number one, a bullish order block, we have to see down close candles. Remember what I said? We buy on down close candles and we sell on up close candles. So when we are seeing a down close candle, what do we see? We go back to the PD arrays, the premium and discount arrays. We see a discount level. So whenever there is a down close candle, we are seeing the discount. And whenever there is an up close candle, we are seeing the premium. So if we see a down close candle, we know that we are going to buy because we are in the discount. And whenever we see an up close candle in a bearish trend, we know that we are now in the premium and we are going to sell in premium. Good. So we have to see a down close candle if we are in a bullish trend in order to verify that we have reached a buying point, and it is time for us now to buy. But for that to happen, an order block has to be created from the support area. Because we are in a bullish trend, the order block has to be created from the support area. So we really have to see a support in order to believe that this order block will hold. What else do we look at? We have to break the high of the previous candles or candle or order block. So in order to be valid, it should not weak. We really have to see a good massive break of the previous candles, like so here. So you see this area, we are seeing a massive break of this area, and this has created an order block. So we shall look at it at length. What else do we have to see? We really have to see a retracement back into the same area that was broken in order to start trading. So, perfect. After seeing that, let us go into the charts and look at the bullish order block. We said it has to come from the support area. and the support area is the fair value gap. So here we had a fair value gap. This fair value gap is providing support for us to trade from, for us to buy from. So after seeing the support area, we have marked it and we are patient. We are patient until price comes back into our support area. Perfect. It has done it and it has reached our support area. What else do we have to check? We really have to see, is it breaking the high of the previous candles? So price moves and breaks the highs of the previous candles. Interesting. So it has broken these highs. Wonderful. We are still looking at our criteria. What else do we really have to wait for? We have to wait for another retracement. So price is now retracing to where? Retracing back into our broken high. So when we see the retracement coming, when we see down close candles coming back, we really now to start putting in our buy orders. We really have to start putting in our limit orders in order to wait for the market to come and tap in our area of interest, such that we move with the market and we ride it until we get enough profits. So price comes back again into our high, the previous high of the order block. And what do? We take buys. It's not a financial advice, but that is the exact price where you take buys from on your maybe demo account. I'm not a financial advisor here. So on seeing that, what happens again? When price left here, what did it create again? It created another fair value gap. And what did we say? This fair value gap will act as support. So price left another support area. So what happened? We really have to see the high of the previous candles being broken. And what shall it come into? It will come into another down close candle here, which acted as the order block in order for it to trade higher. Interesting. So what does it do again? It creates small, tiny down close candles. So an order block does not have to be so many candles. It can be one or two candles, and it can be uh, a group of consecutive down close candles, depending on how you look at it. So what did it do when it was leaving? It left a fair value gap here, broke the high of the previous candles. And what did it come to do? It came back to retest. So on retesting, it went higher. So we clearly see that when price is breaking the highs and retracing back into those highs, we are seeing a bullish trend. So with this, we now have a clear understanding of our trend. Remember, the trend is our friend. So we are creating higher lows and higher highs at the end, which is the basic concept of a bullish trend. So traders, before I leave the bullish trend, you really have to see there is another checklist that we have not checked. There is another point on our checklist that we didn't check, which is MT. MT means mean threshold. So traders, you will hear me using the mean threshold in my consequent coming videos. So don't ask yourself, don't be surprised and say that I'm using difficult terms to explain something that is simple. So what is mean threshold? Mean threshold is the 50%, the 50% of the order block. So here we have the first order block that we based on. So the 50%, and it has to be on the bodies of the order block, not the wicks. So the 50% of the order block. So we know that for this order block to hold, price should not violate the 50%. It should not close below the 50% of this order block. in order for it to hold. So what does it do? Price came, retested, and went higher. It did not even reach the 25%. It did not go inside the order block. That means the order block was very strong. So the mean threshold is the 50% of the order block. And for that order block to hold, for that order block to push price in the intended direction now, which is the bullish trend, it has to respect the 50% of the order block. Perfect. So having looked at that, let us look at the bearish order block. The bearish order block. We still keep our checklist. The bearish order block, we really have to see consecutive up close candles. Perfect. Can we look for those consecutive up close candles? They are here. Consecutive up close candles. They are here. So checked. And they really have to come from the previous resistance now. In the bullish order block, we were looking at support. In the bearish order block, we are looking at resistance. And what is that resistance? So in our masterclass series, we really see that the best support, the best resistance area that we can have in the market is the fair value gap. So we leave other concepts that you really knew, and we focus on the simplest that will give you the highest probability in the market. So price really has to come from the resistance now, and we have the clear resistance here, which is the fair value gap. So price came into the fair value gap and found resistance in order to continue lower. So checked. So what should it do again? It has to break the low now. It has to break the low in order to continue lower. Did it do that? So price came back. Sorry, it's here. So price came back and broke the low here. It came back and broke the law that it had created. Perfect. We are still checking the list. And what else should it do? Upon breaking the law, it has to retrace back into the law that it broke. So we see clearly that price broke the law, moved lower. So for those traders who don't know what price action is, they will chase the market. They will move with the market and it will come back into a retracement. So it came back. That is what we call a retracement to retest the low that it had broken. So what happened? It should not it should not violate the mean threshold. So when price came back into this order block, it had to respect the 50% of the order block for it to go lower. It had, I repeat, it had to respect the 50%, the mean threshold of the order block for it to go lower. Perfect. It did it and it went lower. So that was checked. So another price has to come from the support area. And where is the support? In order for us to go lower, we have here the fair value gap. Perfect. It's here. So we see price now coming, the up close candles, other up close candles coming into the support area. These up close candles are coming into the support area. Sorry, the resistance area. So they enter the resistance area, and what happens on our checklist? When we have reached resistance in a downtrend, we really have to go lower. So we reach the resistance area and we trade lower. And what should we do? We have to break the law of the previous leg. So we come here and break the law of this leg. Perfect. So upon breaking it, what do we wait for? We wait for the retracement. So price came and retraced into what? It really retraced into the law of the previous leg. So on that very time when it knocks there, we really have to place our orders and we ride the move. So traders, briefly, that is what I can tell you on order blocks. You really have to know, you really have to master them, you really have to go into the market and look for these order blocks by yourselves, and you trade according to the trend. So once we see these order blocks with our eyes, we can ride the market and we follow the trend until it changes. How do we know that it has changed? When these down close candles, when these order blocks are started to be violated, when price starts violating these order blocks in the downtrend and starts creating more up close up close order blocks, that is when we shall know that the trend has changed and now we are no longer in a bearish trend, and we shall ride the market according to the new trend that we'll have created. So if you have such understanding of the market, if you can really look at the market like this, the way I have explained it to you, you can get trades every time. You can get trades every time. Your role as a trader is to be patient. Your role as a trader is to stick to your strategy and wait. So traders, we really have to wait. The biggest challenge that we have is that we are impatient. Traders, we have to wait. Wait until the market shows you that it is ready to move. Do not force it. So I know majority of the traders will buy here, and upon buying, the market will sell again, and they will buy. And upon buying, the market will sell again. So get one direction of the market, follow that direction, and you will make profits. I thank you. Until the next video, I wish you the nice trading.